Hey guys, good morning and welcome to the Camp Financial Stock Market Update for July 27th. And let's just get the big one out of the way. How about Apple yesterday, right? Everybody says, all the chip makers, all of them been saying, well, our cell phone semiconductors sales have been down, and everybody's saying it's not going to go that well. Then all of a sudden, here Apple is with an earnings beat, a huge, really more than the beat, just the outlook that they're given is still what's driving the stock, right? So the most interesting thing in that, well, obviously, the interesting thing is that pretty much everybody missed it. Although I have seen notes, and maybe there's something to it, but it says that Warren Buffett knew. Obviously, he's been buying some shares, or his company bought shares in the last quarter, and so a big move. Almost 7%, and another big key to that, to me, is so they've been hovering right around that $20 moving average. They just kind of floated along, and they had just crossed the 50-day on the way back up. But yesterday's big day puts them above the 200-day moving average. So it'll be interesting to see if they hold that 200-day moving average, because if they can, obviously with next quarter, the beginnings of the iPhone 7 sales, there's probably a good chance that stock's still going to run another 20 to 25%. It may be a good time to buy. It's funny because I thought about buying down around 90, and I thought, I just don't see a catalyst there. I don't know what's going to drive the stock higher until they put out the new iPhone. And I thought, well, I'll just hold off and wait and get in. And in the meantime, you miss 15-16% on the upside, and it is what it is. I mean, right? We can't beat ourselves up for not taking chances. When we seen something that we weren't sure about, and we don't want to go after it, there's no point in second guessing your thought other than, well, I probably should have bought at 90, but oh well, life goes on and we move on and look at different opportunities now going forward. So with that said, let's go ahead and hop into the heat map here. Obviously, consumer electronics, Apple, big day, bright green in the S&P 500 heat map. The biotechs performed quite well yesterday. Regeneron up 4%. Alexion Pharmaceuticals, Celgene. Alexion was up 2.5%. Celgene 1.8%. Amgen 1.8%, so it's pretty good day across the line there. Generic drugs, Allergan up 4.5%. I believe this one is Mallinckrodt up 1.5%. Let's take a look at the major manufacturers. Bristol Myers up 2%. Eli Lilly 1.6%. So good day there. Caterpillar up 1.6%. It's funny, just a few weeks ago they're at 52-week lows, and they just caught the rally with just low interest rates has been helping them out, because people want to build houses, and when people want to build houses, they got to have machines to put them up, and it plays right into their hands. So let's look at the telecoms. We got Verizon up almost 1%, AT&T almost 1%, Facebook up 1.75%, and let's see who did not perform well. Well, the air delivery and freight, pretty much all down yesterday. Railroad all down. Restaurants, a lot of red there other than Yum Brands. Electric utilities down across the board. Pretty much all utilities down across the board. A little bit of oil and gas down. So, pretty much what we've gotten used to seeing when one sector zigs, the other one zags. They kind of offset each other and leave the S&P 500 basically flat, down 0.12%. The Nasdaq obviously got the big pop, 0.58, and that's pretty much all driven by the Apple move. Because of their weighting in the S&P 500, and the Dow was down 0.01%. So, interesting day. Like I said, when Apple puts out numbers like that, it's pretty interesting that with as many people that are analysts on Apple stock, it's kind of a surprise that pretty much nobody got that one right. So today, before earnings, or before the bell today, we've got Royal Dutch Shell, Bristol Myers, MasterCard, Celgene, AstraZeneca, Diageo, Colgate, Palmolive. So a lot of big important companies there, as well as then after the market today, we'll have Google, Amazon, Baidu. See if there's anybody else. Aflac. So some pretty important stocks today. Going to report. Tomorrow's going to be interesting as well when we have Exxon, Chevron, Budweiser, Merck, AbbVie, and UPS all announced. So UPS got hit yesterday, yesterday. So it'll be interesting to see what their results come out like on Friday. I lost track of the day. Something to note in the last 5 days, or last week, I guess. Jay Hogue has been buying. He's a director at Netflix. He's been buying a lot. At 87, 85, 85. So he's been buying shares of Netflix. Obviously, he saw something, and he benefited from the big pop when it popped back up to $92. Made 7 cents a share on several of them, on several 400,000. So pretty good purchase by him. Obviously, he has a pretty good feel on the company as a director. So, all right, let's get over, take a look who performed the best in the S&P 500. Obviously, I'm sure Apple is going to be one. Let's start at the bottom. So the bottom, Akamai Technologies down 13%. Robert Half down 11%. Total Systems, the credit service company, down 9%. Wyndham Worldwide down 8.5%, and Ryder Systems down 7.5%. A lot of interesting. It's a very broad spectrum there of companies to all get hit in the same day. My guess is probably a lot of them had earnings yesterday. I know the Akamai for sure. Their guidance was not well received, and honestly, that's pretty much what drives a stock more so than their actual earnings. It's what they guide going forward. I'm sure people saw those numbers and are pretty concerned about what could happen there. Top performers in the S&P 500: Garmin, State Street Corporation, the asset managers, Illumina, Apple, and Edwards Life Sciences. So like I said, I figured Apple would be there somewhere. Garmin was up 11.6%, 9.3% at State Street, Illumina 8.1%, Apple 6.5%, and Edwards Lifescience up 5.6%. So top performers definitely performed pretty well. It's very interesting, that the S&P finished the way it did, down a little bit when you have, there's a lot of big numbers put up yesterday. A lot of companies moved high percentage up. So Garmin, I want to take a look at that real quick before we move on. Garmin jumps after wearables advance, and that's actually something that I've kind of bet on, not on the Garmin side, although I do. That is the watch that I wear is a Garmin. That's my workout watch, so that I can use GPS to track my mileage, and instead of having to map it out beforehand, I can just go and just keep going until it tells me I've got far enough. So yeah, with the wearable advance, that doesn't surprise me. I think it's been about a week and a half ago, I bought into Fitbit just based on, well, the stock's just been so beaten down, but looking at it, they're really not performing that poorly. I mean, it's just, I think expectations have been so high, and that's kind of what drove the stock down all the way down to $12 a share. Well, it dropped down to $11.60 last month, and now it's right around $13.50. And then obviously that news from Garmin should help people prepare for the Fitbit quarter and the expectations that it might have going forward. So worst performers in the S&P or in the Dow Jones yesterday: CocaCola down 3.3%, McDonald's 1.83%, Travelers down 1%, Nike down 1%, and Microsoft also down 1%. So I want to take a look at Coke real quick. Yeah, soda volume decline, and that's kind of what I thought. U.S. stock futures edge up on earnings, but Coca-Cola's outlook is weaker revenue growth, and it kind of coincides with the Garmin conversation and the Fitbit conversation I was just having. I think the soda market, most consumers are getting a little more. We've consistently seen it over the last few years, and I think it's just taken further and further hold that people are very concerned about health, and you're going to see health type things start to drive the market, and some of the more sugary sodas, just unhealthy things. I think cigarettes, that sort of stuff, for those that aren't already addicted, I think you're going to see a kind of a drop off on cigarette sales. The people just not even interested in trying it going forward, because our society's become so conscious of their health now. So now the top performers in the Dow Jones: Apple, we've already beat that horse a couple of times, Caterpillar, number 2, Verizon, Boeing, and then Merck. Take a look here. So they were Caterpillar up 1.6, Verizon 0.93, Boeing 0.82, and Merck up 0.4%. The majority of the Dow Jones actually was down yesterday, with only 19 companies up, or 11 companies up, 19 companies down. Yeah. So that gives us a look there. I want to take a look at Verizon a little further. And I'm sorry about the music that keeps coming in. I have no idea where that's coming from on this web page. All right, and Verizon. I don't think that they had earnings. I think that their earnings call's already out. Well, that's probably a lot of that probably has to do with the purchase of Yahoo going forward and how they can integrate that into their business. I still like Verizon. It's a good high dividend paying company. 4% yield even where it's at now. So it's just a matter of, can they continue to bring the cash in that they need to continue to sustain their long-term debt and provide more income to shareholders. So that's it for today, guys. Take care. Again, if you have any questions, send me an email, chrism@campfinancial.net. Send me a note, YouTube, Facebook, Chris Mielek, or on Twitter @CMielek. And that's it. Take care.